Hello, everyone, and thank you so much for joining in for today's session again. I am Kavita Agrawal, your host for the hour. So, today we are here to talk about Nifty and the week that's gone by. This is our market outlook series where we discuss Nifty, Bank Nifty, and the intersector analysis because we want to know where the momentum is headed, because that is how we'll choose where to bet our money in the coming weeks. So this is how this is going to play out. I am going to take a look at the chart of Nifty all the way from the 3-minute to the weekly time frame and give you a bottoms up approach of where the index seems to be headed. And then we'll do the same for the Bank Nifty. And after that, we will look at different sectoral indices. Now, week over week, we've been doing this. We've done this for nearly 30 consecutive weeks. And what we have seen is that this little bit of momentum analysis has been able to give us an edge in our stock picking. So let's get started. All right. So this is the Nifty, not the Nifty chart. Let's open the Nifty chart right there. Okay. So I have a 6-screen layout with some very basic indicators like RSI and moving averages you can see on your screen. But the application, that's where things get interesting. The application of these indicators is where things get very, very interesting. All right, so the 3-minute time frame, we can see that the index pretty much topped out at 19,874 last week on Thursday, which was on 16th of November. And the 3-minute time frame is suggesting a very subtle range shift in the sense that it has come down to retest the level of 30 couple of times, I would say. But the good thing is that it has not breached. When it was in a bullish range, you can see that the level of 40 was being maintained really well. So there is a sign of loss of momentum on the 3-minute time frame itself. The 15-minute time frame is a little bit more vocal in sharing the story of the loss of momentum because it is showing a clear-cut negative divergence. And if you see here, a similar negative divergence was also witnessed on the 17th of October. And you might remember what happened on the 17th of October. If you don't worry. Your chart is open right in front of you. Nifty went on to fall nearly 5% in a matter of just 9 days. Yes, that happened. All right. So negative divergence, not a very good sign. So what should you be doing? We'll discuss that in a bit. Let's move on to the 75-minute time frame first. 75-minute time frame. Okay. The last time when we saw the Nifty bottom out at the level of 18,000, or not, rather bottom out, I mean, I'm saying using the word bottom out in hindsight, right? When Nifty forged the low of 18,800, you remember this drawing. If you've attended the previous session, I told you very clearly that this breaching of the level of 30 that RSI, oh my God, that was weird. The breaching of the level of 30 that RSI did on the 75-minute time frame, right? That was not a very good news. And I personally was expecting the market to not go beyond the level of 19,600 or 19,400, but it did. And this bounce, this gap up, if you remember, this gap up came when the US inflation data came very, very positive. And since then, we saw quite a bit of a rally here. However, the rally that did go on for the next 7-8 days has been consolidating since the 17th of November. And if you also look at the volume participation, the volume has very steadily declined in the index since this consolidation has happened. And all of this messaging is very, very evident on the 75-minute time frame. What does this mean? This does not mean that the charts are indicating a full-blown bear trend is going to start. It is definitely indicating that there is strong resistance right here at the level of 19,800, or 20,000, you can say, right? 19,800, because also there is this previous high, which is lending a lot of resistance. So what I am seeing is that until and unless we don't see a closing right above this level, so you can see that there have been two tiny spikes. Let me remove this white drawing. And you can see that there have been two spikes. Let me clean up a little bit more. Yeah. So now you can see that there have been two spikes, or rather two attempts at breaking out. But this candle right here that was forged on the 23rd of November, that is yesterday's opening, this was a very important candle because here we really tried to go above the resistance zone but failed. And since then, we forged on the 75-minute time what is called as the narrow range. Now, remember the narrow range formation that we all might be very aware of is nothing but a breakout pattern. So now, whichever direction this narrow range breaks out of, right? So let's go back to the 3-minute time frame to get a little bit more detailing on this narrow range formation and create a channel kind of a channel around it. So we'll just join these bottoms. I guess this seems, it doesn't have to be very, very exact. So whichever direction we get a breakout beyond this particular channel, right? We can expect the market to move strongly in that direction. Going back to the 75-minute time frame and extending the chart a little bit to get a better view. So this is basically the range that we are looking at. Now, clearly you can see that the upside of the channel which we'll experience in the next 5 days still falls within the resistance zone. So we need to ideally wait for a confirmation above a close or a close above 19,873 to start making fresh bets. So there can be two things happening with your portfolio right now. You can either be sitting on cash or you can be invested in the market right now. If you're sitting on cash, I would suggest don't be impulsive and don't take any rash decisions. Wait for really solid opportunities to come your way. Having said that, it's not true that the market lacks opportunities even now, because trust me, the stock market is full of opportunities at any point of time. It's just that you have to be a little bit more thorough in a market like this when the market has already rallied quite a bit and given consolidation, right? So just this last week, I have posted a lot of new recommendations for my members. And if you also want to be part of my subscription plan where I share trade recommendations and help you manage the portfolio, manage the positions, make proper entry exit, then at the top of this video, you'll see there is a gap up button. Click that and find me there to know more about the plans. But in general, if you are looking for new opportunities right now, be a little bit more thorough. Be sure to do the volume analysis, because a very common theme that I've seen across stocks in the last 1 week is that the volume participation is significantly declining on the upside, which is a very telltale sign of a last leg of rally. So I'm still very bullish on the overall market, but as a short-term trader, because I swing trade with positions of 2 weeks to maybe few months, I am very much interested in booking profits at this time. Okay, so let's come to the second category of people who may have their portfolio heavily invested in the market right now, and I'm only talking about your short-term trading portfolio. If you have a short-term trading portfolio which is heavily invested, you need to make sure that your stop losses are well set, so that if the market starts to turn down, you can book your profits and get out. It is better to make a bigger mark-to-market profit than seeing your unrealized profits turn to losses. And I'll give you a great example. So this week I had an open trade in Cipla. Okay, and if any of you here is an active trader, you will know what happened with Cipla. There was a massive gap down and a massive crash in the prices. Luckily, because I had initiated a tranche or installment position. I bought one piece of my investment here and the other leg of my investment here. Now, when the price went and touched my green zone, which is basically my resistance zone, and it consolidated it, despite of a strong candle, absolutely lacking volume and coming at the resistance, I knew that this did not look good. So what I did was I moved my stop loss to the low of this strong candle. And then when the market opened on the 23rd of November, before the prices crashed, my stop loss got triggered. So I made a profit of around 6,000 rupees on the position, which I know is a small profit, but I closed the day on a 15,000 mark-to-market profit on that position only. So now you decide what my profit was. Was it 5,000 or was it 15,000? All right. Now with that thought, let's move on now to the chart of Nifty again and take a look at the daily time frame, because it's been a while since we discussed that one. All right, so this is the daily time frame. Let's just adjust this, and charts are taking longer than they usually take, so we'll just wait it out. Okay, I seem to have 80 Mbps of internet speed, which should not cause this delay, but you never know. Maybe it's a streaming. All right, so let's look at the recent price activity. And what I am seeing is that there was a massive decline of volume until this point. So basically, this point to this point, there was a decline of volume, which means that we saw this massive rally on a falling volume. This piece of the rally was around 4% in 13 days, right? And then the prices declined, but so did the volumes. But what did we notice again was that the prices went up, the volume did catch up a little, but not enough. And then we saw a decline in the prices in the Nifty price on an increasing volume all the way till here. Now, what is interesting is that we've seen this rally right here, right? And if you see from this point onwards, the volume has increased, but not as much as we would have liked. The last 3 days, especially, the volume has been a little bit sad. And if you look at the RSI of the daily time frame, the yellow line that is on the chart, we can see that the RSI has come to the level of 60 and is starting to show signs of resistance. Signs of resistance is something that does not make us happy, especially because we're swing traders and we love being long on stocks. Signs of resistance means we need to be more careful. We need to start changing our stop losses. We need to make our stop losses tighter so that if the market turns, the first thing that happens to us is we get out. We'd rather sit on cash than see our unrealized profits turn to unrealized losses. Now, let's move on to the bank Nifty and see what might be unfolding there. YouTube is not receiving enough video to maintain a smooth stream. Why does this keep happening to my streaming? I really have no idea. If somebody is watching this video and if you're a streaming expert, could you please connect with me and help me out? I think I'm experiencing some technical glitches every single day. All right. Bank Nifty, let's move on to the 3-minute time frame to start with. And what I see here is, okay, so this decline that happened right from 16th of November up to the 22nd of November, even on the 3-minute time frame, it is screaming for help. And this is clearly in the negative range shift. What does the negative range shift mean? Basically, the momentum is saying I am in a very bearish mood. So even if I keep going up, even if I give you a bounce, it's not the starting of a bull run. I'm just taking a breather from a downward trend. So banks is a sector that I have been warning you for a while to stay away from. I got lots of queries for Bank of Baroda, SBI, and many other banks, and I've told people very clearly that there are very, very few banks which are worth investing in right now. But majority of the public sector banks, especially the public sector banks, are looking very, very weak. So you need to be very cautious when opting for banks as a choice of investment for your capital. So the 3-minute time frame of the bank Nifty is hands down weak. Moving on to the 15-minute time frame. 15-minute time frame is also suggesting that I am in a negative range shift. Clear resistance coming in from the 200 EMA of the 75-minute time frame, which is this faded blue line on the 15-minute time frame. Going to the 75-minute time frame, we can again see this blue line moving through this part where the price is just taking resistance. And you can also see very, very clearly on the chart of Bank Nifty that since we took support at this 200 EMA of the daily time frame and started to go up, the volume has been declining, which means that the upside that we've seen in Bank Nifty since 22nd of November all the way to 24th of November did not see high participation, which is a sign of weakness. Now, moving on to the daily time frame in Bank Nifty, what are we seeing here? we are seeing that we took a very telltale support at the level of 30 on the RSI of the daily time frame, which is good, but we have not even touched 60 yet, even though we have touched 60 on Nifty. However, there is a resistance zone which the bank Nifty has already touched. 43,800 was the resistance zone which was told to you in the previous session, and we have already reached there. I am personally, again, I will emphasize, not bullish on Bank Nifty at all, or the entire banking sector in general. Now let's move on to the sector comparison chart, okay? And we want to compare our prices from 22nd of November. So this is the 75-minute time frame, which is fine, 22nd November. So we'll just, okay, you know what? Let's go a time frame lower. Let's go to the 15-minute time frame. So let me explain to you quickly while it loads what this chart means, okay? So this is a comparative chart, and how do you create it? It's very easy. Go to a new layout, okay? You just have to create a new layout from here, and then whatever index you want to compare the other sectors with, right? So for example, you want to choose to compare with CNX 500 like I want to do, okay? You need to change to the line chart, and then using this tiny little plus button, you need to add other symbols. So whatever indices are there, you click CNX and you'll be able to see. You need to also add some filters for Indian indices, and you'll be able to see lots of Indian indices here. Now, if you want a list, an exhaustive list of all the Indian indices, and then you simply go on the NSE India website and you get it. That's what I did. I got